What's up, everyone, and welcome to Now, Next, Never, our show about what's happening now, what's happening next, and what may never happen in the world of investing, stocks, crypto, NFTs, and so much more. I'm Nicole Casperson, and with me, as always, are my co-hosts Alana Saparu and Zaid Admani. Guys, we are super hyped today. A lot to cover in the news cycle. Zaid, hit us with what's up.
Yeah, it's Fed Day. The Federal Reserve is having their meeting right now as we speak. Jerome Powell is speaking. I'm pretty sure we're going to do better numbers than him, but we can tell you that the Federal Reserve is raising interest rates. We're going to talk about what that means for you. Also, nickel prices and other raw materials and inflation are making Teslas raise their prices. We're going to talk about what that means. Also, having a venti with your Volvo. Starbucks is partnering with Volvo to be able to give you the ability to charge your car while grabbing a drink. And finally, there's a company out there that started by posting memes on Instagram, and now they just raised $6 million. I'm not making this one up. You're going to want to stay tuned for that one. But Delano, hit us with what you got.
6 million, Zayd, that sounds actually really amazing right about now. But thank you for giving us those headlines because we have so much to get to on our Fed Day. I'm super excited. It's not my birthday. It's Fed Day. It feels like my birthday, Nicole and Zayd. It really feels like it. But first, all of you that are watching, please make sure you like and subscribe to our channel because we give you those hot takes and those cold facts every day. And do one more thing for me. Make sure that you hit the notification bell so you know every time we're going live. Set a reminder for yourself so you know every time we're going live. We're going to start right now and get into it this second. All right, so the Fed Day is here. Couldn't be more excited. So what happened? The Federal Reserve announced their latest decision to increase interest rates for the first time since 2018. So for those of you who don't know, the Fed is our central banking authority that has a couple mandates. One, try to keep as many of us employed as possible, and also to make sure the prices don't get out of control for any of us. So right now they're working on the inflation part of the equation by increasing interest rates to moderate growth. They signaled that there are going to be 6 more interest rate hikes this year, which is at the high end of projections that people had. So I think this is actually a really interesting story. The markets have kind of downturned on this announcement, Nicole and Zayd. What do we take of this, Zayd? Is this something that all of us we should be watching, but what does this mean for our money?
Yeah, Delano, I appreciate you kind of giving us a little brief on what the Federal Reserve's job is. I feel like I was back in AP macroeconomics, so I appreciate that refresher. Yeah, Jay Powell and his crew they announced the interest rate hike. Now, what's crazy is that this was expected, right? Just a few months ago, the Federal Reserve told us they're going to be raising interest rates. We've been in an environment of historically low interest rates for the past 3 years. They told us they were going to raise interest rates, and that's exactly what happened. What's kind of crazy right now, what I've been monitoring since we started the show, was like how the market has reacted to this. A lot of people, including myself, had thought that because the Federal Reserve told us a few months ago they're going to raise interest rates at this meeting, the market was kind of already priced that in. The markets weren't going to react too crazy to this stuff. Well, that's not what happened. The markets were up 500. The Dow Jones was up 500 points today. It's trading flat today, so it pretty much lost a 500-point gain. I guess there is a bit of a surprise in the market. I think, Delano, you were saying before the show that previously the Federal Reserve had said that they were going to raise interest rates by anywhere between 5 to 7 times this year. It looks like they're going to be doing it 7 times this year, and I guess the market potentially thought that it wasn't going to be that many times. So that might be what's causing a little bit of turbulence in the market. The reason this is important, though, is because the interest rate has an impact on our day-to-day lives, right? The Federal Reserve is raising interest rates to make borrowing money more expensive, and that's going to pretty much limit the growth. And the reason they're doing that is because of high inflation that everyone's been talking about over the past few months. So by increasing interest rates, it should result in lower inflation. So that's one of the main reasons why they're trying to take up the interest rates.
Yeah, Zayd, you're getting at kind of a little bit more of an optimistic view, right? And that's how we should feel, right? It's just the first rate hike, and it sounds scarier than it really is. But exactly, when the Fed hikes rates, it's a signal that the Fed feels confident enough in the economy's potential to handle a tighter policy. So The risk at this time is that there's just a lot of uncertainty. We're still trying to recover from the pandemic that's not over yet. So I'm just thinking about the power of the consumer, the reopening of the economy, and it's hard to have a recession if jobs and spending stay strong. So I'm confident in the American people. I'm confident in the reopening in our economy, and we will see higher rates on things like credit cards and mortgages, but exactly, that big question really is on inflation and helping consumers navigate their personal finances and how this impacts daily spending. I think that's maybe the feeling that's happening right now. And even though we knew this was going to happen, maybe the markets just needed it to be a reality, right? Like there's something about something actually happening and then you react differently than maybe just an expectation.
Exactly, Nicole. And from an investing standpoint, as an investor, money manager, I'm always looking at the trends in the market. So as they mentioned, in September, when the announcement came that interest rates were going to be raised, we have seen riskier assets kind of correct and pull back. Think of your Bitcoin, your high-flying tech stocks, your high-flying growth stocks. Those will pull back for a lot of different reasons, but some of that includes the Fed's action that was to come, which is now here. And so the action's here. Usually when you see the action actually happen, in interest rate cycle increases, we've seen in the past 5 out of 6 times that the market actually moves up during those times. There's no telling what's going to happen this time, right? We don't know. Past performance is not a guarantee of the future. But it's interesting to see the trend of what happened in the past when the announcement happened, and also in our past history of interest rate cycles when rates are being pushed up, how the market reacts. In past times, the market has actually increased during that time. So this is something that we have to keep watching. As a money manager, I'm super, super focused on this.
That's good to know, because I keep looking at off screen a little bit because I'm checking my laptop to see my Twitter feed to see if any breaking news happens. I'm trying to be like Adrian Wojnarowski just to see if there's any breaking stuff. And right now there hasn't been anything crazy. Jerome Powell hasn't said anything crazy just yet. But it's good to know, Delano, that based on historical data, that sometimes even after the Fed increases interest rates, we do see a bit of an increase in stock prices. And this is all part of the fun of the Fed. You expect something, they do it, the markets still react like they want to react. So I'm gonna keep a close eye on this. We're all gonna keep a close eye on this to see if Jerome Powell says anything crazy. But as of right now, it's still gonna be a 25 basis point increase in interest rates and another 6 more this year rate hike this year. So so we'll see what happens if the markets decide to maybe make another U-turn and start turning up again, if based on what Jerome Powell says.
Exactly. Let's move on to other price raises. Tesla. What do we have with Tesla?
Yeah, so Tesla is raising their prices. Elon Musk tweeted yesterday that the price of a Tesla is going to increase across the board by $2,000 because of increase in raw material and inflation. So that pretty much sets the cheapest Tesla at $47,000. And I guess the story for me here is that I guess EVs still remain unaffordable for most people. Even like the middle class, even upper middle class. If you're making, $70,000, $80,000, $90,000 a year, you're probably still priced out of a Tesla or an EV. And what's concerning is that it's trending in the wrong direction. I'm afraid that EVs are still going to continuing to be a luxury item for at least a decade plus, maybe even 2 decades before we see the general population start buying some up, because at these prices, it's unaffordable. And with these raw materials, we still haven't figured out as far as figuring out a way to make cheaper EVs. And if Tesla's cheapest car is $47,000, I don't know when that trend is going to reverse. I'm hoping for it, but I'm a little skeptical right now.
My spicy take always. If Elon Musk wanted to really change the world, he'd make EVs more affordable for everyone, nickel shortage or not. Granted, no other car manufacturer is doing that either, so there is that. Now, I just want to pose a question. Bigger picture here. I spent some time in the past as a reporter covering the auto market. EVs have to be more expensive so that manufacturers can keep making their money train going, right? EVs require less maintenance. They require less trade-outs. They require less ancillary products and services, so your dealers aren't making as much money, and et cetera, et cetera. And those are a huge banking opportunity for car manufacturers. So I'm just putting it out there that, maybe the bigger picture story here is that there isn't so much interest in actually getting more EVs on the road because it's detrimental to car manufacturers' bottom line. Though
Nicole had this with the conspiracy theories.
Look, I'm not trying to be a conspiracy theory. I've reported on this industry. I know how things work, and I understand that, and I know that is a concern. Like, that is an actual concern, you know. And look, I want to be optimistic here. I want to give institutions the benefit of the doubt, but as a journalist, I've always been skeptical of institutions. So sorry about my ethics here, but I just want to pose the question there. And I don't know, I want to be optimistic. I want to hope that these institutions don't feel that way, that they want to actually help climate change, help the world be a better place, create sustainability, right? What's the statistics? 11 years until irreversible damage to our Earth's climate. Like, any setback is a problem. So that's Delano, help us out here.
Nicole and Zayd, you can't do it to me. Zayd, you're making me look like the anti-Dave Ramsey, because I do not think that this price increase is going to hurt what people going on in middle America. If you're talking about a $2,000 price increase, I think people would spend that money here to, one, help out our economy, help out our world, help our social economic environment. And I think people would spend that. And what's the alternative, Nicole? The alternative, there is no alternative here. We're having price increases in their raw materials on Tesla's side. They pretty much have to increase prices to maintain any sort of margin in this environment. Elon Musk tells us that on Twitter every other day. So he's talking about the price increase, and he said the only way we can maintain margin is if we increase the prices of our vehicles. And I think Tesla sits in that range. If you're looking at the stock price right now, they sit in that range of a company that has incredible pricing power. This is a company that is one of the bigger brands. They sit likened to like an Apple or something, right? Like, where whatever they do, people can still buy, because guess what? You can be fashionable, you can look sleek, and you can also be driving a nice Tesla and helping out the environment, Nicole and Zayd. I just believe that you guys are on the wrong side of this one.
Look, Nicole's hot take of Elon Musk wanted to change the world, he'd make EVs more affordable. If Elon Musk slashed the price of EVs by $20,000 and made all of his Teslas sell for $25,000, Tesla would be bankrupt in an hour. Like, they made $5 billion in profit last year. They make a lot of their profit from selling environmental credits, right? They're still barely a profitable company. I just think this is just a reality, right? Delano, you said it best. You're right. The increase of $2,000 in EVs isn't going to impact an upper middle class guy making $230,000 a year to spend an extra $2,000 on his Tesla. And Tesla has had crazy demand. But I guess what I'm trying to say is I just don't see a trend of EVs just becoming more affordable for the general population. And that's my biggest concern. And again, I am pro EV. I want this to happen sooner rather than later. But I mean, even someone like myself, I can't afford to buy an EV just yet. And I just feel like that's going to be the case for most people. It's just going to be a luxury item, which again, that's kind of how this all started, right? Elon Musk was selling luxury, really expensive EVs for the longest time. I just feel like the timeline for that is probably going to be longer than maybe most people thought. Maybe most people thought that we were going to have EVs, dominate the roads by the middle of the decade. I just don't see that anywhere close to that. I think it's going to take a bit of a time. But yeah, if you're making $250,000 a year, and this $2,000 price increase is not going to do anything. In fact, I mean, yeah, you're not even thinking about that. But that's kind of what my take is. And
let me try to level with you. Fine. I'll give a benefit of the doubt that if EVs are more expensive on the front end, then that means that consumers are just spending that money at the front, and then they don't spend as much money on services and upkeep, right, of the car. So maybe that balances out. So I guess maybe I'll have a change of heart, but I don't know. There's just something to it. And you know what? Elon Musk is constantly praised for being such a genius. So I think that maybe he should just figure it out. Come on.
I mean, yeah. The economics are there to figure it out. Whoever. I mean, there are economic incentives to figure this out, right? Everyone is trying to be like the first big affordable EV car, but there's a reason they can't figure it out. I honestly don't think it's because of maybe there's a bit part of it being crazy. These manufacturers don't want to give up their margins on their maintenance, but I can talk about this all day. I don't want to really go down this road.
All right.
Let's move on.
Okay. So, well, if anyone has any other spicy takes on this, feel free to reach out to us hosts, because we'd be happy to talk about this as much as possible, but also comment below. Let us know what you think. Anyway, but we are moving on to a story of EVs, but something that is a little bit more progressive to the industry. Volvo Cars and Starbucks are partnering on a pilot program to install EV charging stations. Volvo said it will install as many as 60 Volvo branded fast chargers at 15 Starbucks locations along a route from Denver to Seattle. So Starbucks offers free Wi-Fi, premium coffee, and now EV charging. Obviously seems like such a genius move for Starbucks. But Zaid, help me out. Let me understand what's in it for Volvo, outside of like helping change the world and climate change and a solid marketing play.
Yeah, I mean, it makes sense for Starbucks, right, to start off. It makes sense for them because by having this EV charging station, people are going to have to charge their cars. It takes 20, 30 minutes to charge your car. So you're going to go inside, have one of their high-margin coffees or cupcakes, or not cupcakes, but muffins or whatever. So it makes sense for Starbucks, yeah. It makes sense for Starbucks to have that. For Volvo, what they're doing is, when I look into the story, Volvo is going to be allowing their cars to charge for free. So while other EVs are going to have to pay to charge their car at the Starbucks. If you have a Volvo, you do it for free. So there is a benefit for driving a Volvo, and maybe this convinces some people to buy a Volvo EV instead of another brand EV because you get free charging at Starbucks.
It's low-key convincing me a little bit. I'm not going to lie. It's like the branding is working. I'm like, Starbucks and Volvo? Ooh. Anyway.
It is working. Like, there's a Starbucks pretty much on every block. So, right, this makes sense. I know they're starting in a smaller area first and then they're expanding. But this makes sense. It's like a three-way partnership because you have Volvo, you have Starbucks, and you have ChargePoint, which is like an EV infrastructure play, which they're going to continue to build out that infrastructure. This is good overall for like all EVs in the future. And as they mentioned, I think this is super, super important for Volvo because as a New Yorker, I haven't driven in forever, and I haven't driven since I lived in Chicago, and like this is something where I'm not like really paying attention to the brands. I know Tesla because they're the biggest, but I haven't really known that much about the EV Volvo brands or the Volvo cars, and so this is something where they can get their brand out there, they can entice people to buy, you can charge for free in those locations. I think this is a home run play for them, honestly.
Yeah, I mean, it makes a ton of sense, and I think, Volvo and Starbucks, this is like a suburban mom's, like, just perfect for the suburban mom, and for other retailers too. I can definitely see a lot of retailers taking advantage, like using the same similar strategy, partnering with car manufacturers to have EV charging stations at, I've started seeing them pop up at my local Kohl's and other places. So while you go shop, you can charge your car. So that there's a lot of like benefits there, and maybe like you said, this is probably how they build up the infrastructure, because that's one of the things that a lot of people talk about is like we don't have the infrastructure in place, and maybe this is how it gets built.
Do we see more of this? Do you guys think we see more of this from other EV manufacturers, or it's really just like a play where Volvo kind of got in on something?
Think about when you like road trip anywhere and the type of chains that you see, right? Like a McDonald's, a Chick-fil-A, whatever. Should all of them just partner up with like car manufacturers so that we can get more EVs on the road and get that infrastructure put in? I mean, seems to make a lot of sense to me. But is there any downside to this pilot program? Is there like a potential risk to this? What if they do it and it doesn't work, I guess? Or what if people don't want to buy more EVs just because of it?
That's a fair play. I think one of the downsides, if you look at Volvo, is like, what are they? The brand recognition is there, but if you're talking about monetarily, they're giving it to free for their car users. So like, where are they going to get that gain from? Is it maybe on the other side where people are buying more? Like, hey, I can get free charging at the Starbucks between Denver and Seattle. So I don't know, but I think we have to think about like how this plays out on a much bigger scale. So we'll be watching for that.
Yeah, for sure. All right, so we're going to take a break from talking about cars for our final story to talk more about content. Almost Friday Media, which is a company behind the comedy channel Friday Beers and a host of other popular social media accounts, has raised a seed round of $6 million to grow their business. Almost Friday began as a collection of Instagram accounts and gained popularity as a relatable voice for weekend cultural, sports, music, beer, character-driven comedy, and today they're growing their network of 3.5 million followers. So Almost Friday, if you haven't heard of them, they generate revenue by selling merch, staging live events, and working with brand sponsors. This is really interesting to me. I think that, the creator economy, we're getting to a point where we're seeing a lot of saturation here, almost too much saturation. I personally work with a media startup that it's called Work Week. Hey guys, and basically they help B2B content creators elevate their brands, but they're also a brand working kind of like behind the scenes. So I don't know, are we gonna see kind of more of these like media companies, if you will, right? Like pop up more and more? Is this too much? Is this good? Like, do we need more Barstool styled companies in the space? I mean, we got some professional content creators here with us right now. So what do you guys think?
Yeah, I mean, yeah. So no, that's first of all, shout out to these guys for raising $6 million from just posting funny memes on Instagram. Like that's awesome. Congrats to those guys. And yeah, I think this is a trend that we're seeing. Creators are the next big entrepreneurs, right? Like individual creators, we've seen success of people like Mr. Beast. We've seen success of Jake and Logan Paul. And then also like even creator aggregate companies like The Ringer that was acquired for I think $250 million from Spotify, Barstool, which is a very famous one, acquired as well. So I think there's just a huge appetite for these content companies and creators, and investors were kind of throwing a bag at these visionary CEOs coming out of Harvard, or visionary tech people coming out of Harvard in the mid 2000s. So we had Mark Zuckerberg, Evan Spiegels of the world, and now that money is going towards creators and companies that are focusing on creators, because that's where the potential home run hits are. So the thing that I think about is like we've seen traditional celebrities, right? Like Rihanna being a very traditional celebrity, going from being an entertainer, and now she's IPOing her company that we talked about yesterday for $3 billion. So I think there's investors are kind of seeing something very similar. Like, okay, if Rihanna can do it, maybe a similar creator from YouTube or Instagram can kind of reach that similar number of scale.
Exactly. No, I actually thought of an interesting aspect. It's like, if you're an investor right now, where would you want to put your money? Into like a legacy, old, big media conglomerate, or into someone like you guys are mentioning, content creators like you guys that are on a smaller scale but have way more engagement, you're growing, you're newer. If I'm an investor, I want to put my money behind Nicole and Zaid, not these big other media conglomerates that are public companies already. That's where more growth will be. If you have an engaged social capital, and content is real capital these days. And that's what these investors, advertisers are figuring out. So it's like, why would I not want to back and be a part of the growth story of a company that's newer and has incredible engagement in a niche community and that knows how to do really engaging content versus some of these old legacy media conglomerates that haven't really done a good job in the past. You mentioned Barstool, which has gotten so big because they just got a lot of talent. Like they've done so well at containing that engagement with getting the best talent and all the content aggregation under their platform that they are literally becoming one of those bigger media conglomerates already. They already are one of those. So I think it's interesting. I'd rather put my money behind you guys.
I appreciate that, Delano. And I think Nicole brought up a really good point earlier about how there is maybe a bit of an oversaturation as well. And I think we kind of saw this. We see this with any market, right? We saw this when it came to the social media companies in the mid-2000s, late 2000s, where there was a new social media popping up every single day. So we're going to see the same thing happening here. There's going to be a new content company, a new creators popping up every single day, and we're going to have winners and losers from that too. Like a couple of losers just from that I can think of off the top of my head are like Funny and Die. Remember Funny and Die? I used to watch them all the time. College Humor is another one I used to watch all the time. So all these came and went, and so there's going to be a lot of losers as well. So there's obviously a risk for these investors, but the winners are going to win big. And I think that's what the investors are always looking for, like the home runs.
We know that every company right now wants to be a content company, but can a content only company just be a content company anymore? Like what are we see the successes, right? Like we see the success of a Barstool. We will, hopefully continue to see the success of Workweek and creating that same business model, but with B2B media, right? And business content. But, what are the risks here? What are the potential failures? I get that it makes a ton of sense, right? Band in all of the creators in, one niche, right? In this case, it's like weekend culture and beer and, help each other out, right? Like share each other's content, build each other's following, right? Together, they have the 3.5 million, right? I mean, we don't know what that looks like separate, but they're stronger together. That to me makes a lot of sense. It's clear, like success. But what is the potential failure, right? Like, is it that people don't want that? I guess that's what is the big question for me too.
Yeah, I think if you don't scale, if you don't have content that is scalable, one, and two, you don't get the right talent, right? Like the model for Barstool is continue to overpay, kind of like how Netflix does, pay for the right content and talent. So I think you have to do that, but you can do that and just stay content. Maybe you add merchandise in there, maybe you do some touring, some different things, but your content the core of your content has to stay engaging to your audience through talent and getting the correct talent. So, But wait, guys, don't get away from this. I want to make sure if I give you guys a 50K check, I'm going to get a 10x return. That's all I need to know. All right? That's all I need to know.
Guaranteed. Guaranteed. You
got
can
it.
count on us, Delano. I love it. I got a new investor from the show. Thank you. All right, moving on, guys. That does it for the top of our stories. Now we're going to Now Next Never, where we talk about some other stories you should be paying attention to. Delano, what is happening right now?
Yes, right now, Nicole, we're hearing whisperings about the NFT bubble. Is it gone? But I'm here to say, look at the trends, all right? In 2018, there was 41 million in NFT sales. In the first half of 2021 alone, there was 2.5 billion of volume. What does that mean? There's gonna still be plenty of people that want to get into the NFT space by minting and creating projects. So how do we do it? I think the best thing is the few tips that you can do it to do it well right now. One, understand what you can and can't do when you take on a project. I think that's the biggest thing you need to do. Two, determine the best way to engage your audience. How are you keeping your community involved? What is that content that you're providing to them? Three, the blockchain is forever, folks. The blockchain is forever. And lastly, NFTs are just the beginning. Once you mint, once you do a project, make sure you're keeping people engaged and providing value. I think it's super important right now because this NFTs aren't going away. So how do you get involved in the right way is really important to know.
Wow, that was an amazing breakdown.
Totally.
Thank you so much, Delano. All right, so I'm next. The Senate passed the Sunshine Protection Act, which might be the happiest name of a bill ever, and that would mean an end to changing the clocks twice a year, and a potential end to my seasonal depression and those depressing early afternoon darkness during the winter. So I love this, but the bill still has to pass the House, and if it does, it won't happen until 2023. So I'm super curious what the audience thinks about this. Like I said, I'm a sun baby. I'll take all sun, less sleep all day, every day. But curious what the audience thinks. Comment below. Let us know if you prefer darkness longer, I guess.
Well, I mean, there's been a lot of debates about this, right? Like I've been seeing it all over Twitter, like people talking about how instead of going for a permanent daylight savings, we should go to permanent standard time where the sun rises earlier. So instead of having sunrise happen at 9 a.m. or instead of having sunrise happening at 8 a.m., you have sunrise happening at 9 a.m. during daylight savings. So, I don't know, do you prefer the sun rising earlier and setting earlier, or do you prefer the sun rising later and setting later? I prefer the latter. I'm okay if we have darkness till 8 a.m. as long as I get more sunlight in the afternoon. But there was a lot of hot debate about that. So I wonder if this thing passes the House. Like I hope it does, because I don't want to change my clocks twice a year. But there's still a lot of debate to be had, and people are still going to be upset. But that's the world nowadays. I have never for me is sticking to the sports teams because I'm a sports nut. Is March Madness. March Madness started last night, continuing on to today, and the main days start on Thursday. Brackets. So it's bracket season. If you're filling out a bracket right now, if you're trying to get a perfect bracket, let me just tell you right now. It's not going to happen. The odds of having a perfect March Madness bracket is 9.2 quintillion. There's a graphic up there talking about how many zeros that is. That's a lot of zeros to get a perfect March Madness bracket. And if you know a little bit about basketball or college basketball, and you can kind of play the odds, the odds of a 1 seed losing to a 16 seed isn't very high. So if you kind of take all that into account, the odds shrink down to 1 in 120 billion. So that's like the same odds as being struck by lightning or something. So even if you watch college basketball, you're not gonna get a perfect bracket. But hey, it's still fun to make one. I'm probably gonna be making a couple of these and play along. So just let me know if you drop in the comments below who you guys think is gonna win the tournament this year.
Zay, we have to know your pick. Who do you got?
Every year I make a bracket with my alma mater Texas winning, even though we just always disappoint in the first or second round. But realistically, I've started to do my research, and I think I'm leaning on Kentucky. But that's just based off of 45 seconds of research and just kind of seeing what the hype is. But it's all random, dude. I don't watch college basketball very much.
I haven't watched the lick myself, but I'm going Gonzaga. Chet Holmgren, he's from Minnesota, my home state, so I gotta go Gonzaga.
Shout out to Chet.
Wow, love it. As sad as it is to wrap up all this awesome sports strategy talk, guys, that does it for our show today. Thank you so much for tuning in. Thank you to my co-host for joining. And be sure to like, comment, subscribe, and stay tuned because we're coming at you tomorrow live once again with all the big stories, the hot takes, cold facts, as Delano likes to tell us. So be sure to tune in tomorrow. We'll see you then. Enjoy that extra sun. Bye.
Bye.